TradeTheMBI.com. This is Jonas Reports for the 28th of September, and well, the continuation of softness with that white MBI leading the way, and we're still magenta below yellow. So all those are the indications of this continuation. And we talked about this with the orange caught in between DOC red and DOC cyan right here. Usually we get continuation within those moves, and so the fact that we've broken down to new lows. In line with expectations. It's also in line with everything that we're seeing from economic reality. All the things that we talked about at the beginning of the year are all coming to fruition, just like we thought in the fall. And so none of this is a surprise. Are we still relatively elevated from a value standpoint? Yeah, because we were disproportionately elevated at the start of the year. I even talked about this at that point. As we were nearing this 5,000 level, it was excessive given what we could see was building. And so the fact that we've only dipped back into the 36 range is still, in my view, elevated. But this is a target range that a lot of people have talked about between 36, 33. So we'll see. But for now, nothing's changed as far as that. We're getting to this extreme level on the DOC red map. Minus 23 on the green, minus 20.15 for the red. Potential to go a little bit deeper before it has to make a turnaround. And that shakeout is going to be problematic because even on a turnaround, you're going to get a slight push, most likely back up to um, the zero break that took place up here in the 37 range, and we'll see where it goes from that point. Could be some resistance fighting at that level, and of course, it assumes some kind of change in the economic outlook, which doesn't look particularly likely unless there's a major reversal in policy, which that's the interesting thing. I don't think things are bad enough that you couldn't change the policies right now that would have a significant impact in the very near future that could really stave off some ugliness, but it doesn't appear that anyone's all that interested in doing it. You're starting to see the effects of this because you've got chaos in Europe. You obviously saw what happened in Italy with the massive turnaround. And some of this was obviously backlash to COVID, but also related to just this continued apathy towards well, the interest of what people are actually looking for. You've had a complete departure from the positive economic policies that took place a few years back to completely different idea that this global reset of you'll have nothing and enjoy it. Well, that's exactly where they're headed with it. You can see it in the euro. And of course, the language from the EU going to like places like Italy, it's like, well, if you don't do exactly as we tell you, we're going to punish you. It's like shocking to hear some of these things because well, it's not shocking because I kind of expected it because this is that techno bureaucracy that they've created that really doesn't allow any independence from any of the individual EU members. You either follow their dictates or what happens when they stop buying Italian bonds just because. What kind of crisis is that creating? Well, you can see the crisis it's creating. I mean, you've now got a euro at 0.95. Of course, you had the Nord Stream explosion. Um, that's a bizarre one because who does it benefit? The only benefit goes to the U.S. because they're going to need to import LNG from the U.S. Russia was making plenty of money piping what they were through the Nord Stream. And if you've seen what it takes to do these underwater pipelines, I mean, I've watched the tutorials, videos on it. It's massive steel wrapped in the concrete. It's not accidental. I mean, it's clearly an intentional act. And then you got to ask yourself who benefits from it. And clearly, here from a gold standpoint, there's no interest right now, despite the fact that you've got rising rates. Inflation hasn't changed. Still a strong argument that gold is a secondary store of value within that, but I think that people are looking at some serious potential for economic carnage, and gold won't be that exciting at this particular stage. But when it does get exciting, it's going to move quickly. And the oil situation, while oil may not be problematic. I mean, it's still the range level is problematic. I think it's still too high. Under 60 would be obviously beneficial from an economic standpoint, but it doesn't reflect what's going to happen with natural gas and what's going to take place in a freezing Europe that may even be short of food in that. So it'll be interesting to see how that plays out. And, this was probably the easiest trade of the year. I had said to everyone when we were up here at this 150 that we should be under 100 for treasuries and almost there, 195. So very close. Maybe we break below the 100 level finally and fulfill that expectation, because this was the easiest handwriting on the wall of what was going to be coming. Um, Treasury's bond market doesn't usually get it wrong, and they didn't in this case either. They were a little slow to react. This was an unusual push. This was during that whole period where everyone thought we were going to flip to quantitative easing, and really kind of, I guess, angered Powell, and he made it clear that no. I think they even have mortgages now approaching 7% for 30-year. So that's getting crazy. And so this becomes the interesting one. Bitcoin still holding that 18 despite all of the negativity that's going on. And does this become that outlet that we were talking about, or Ethereum, um, for what appears to be just currency carnage? I mean, right now the US dollar is preeminent because simply you've got to buy a lot of commodities in US dollars. But as that starts to get reduced, the demand for US dollars from the third world and or even the secondary European communities may wane. And if that does, well, that's going to be an interesting one for the dollar. 50K has been in this continual decline all the way through, and you still have MBI white leading. And this gets back to that perfect point. When you've got short signals both from the market as well as from these higher signals, this is where I take advantage and say, hey, in the 5K, I'm looking to attack short setups that develop, whether they're intraday, midday, and you look for an extended run on. Likewise, when it's inverted and you see positive, then I'm looking to run my longs for extended movement. And you can see we've had some just beautiful signaling from this uh, 5K range. I mean, you get the early parabolic moves that are all in positive extremes. We watch each of those fill intraday every single time. It's been exactly the way the markets normally used to behave before there was intervention. And now that there seems to be less manipulation, at least third party wise, and by that I usually mean, secondary government intervention, because that's exactly what they said they were going to do, and they did do it. But you can see we get our clean signals. Anytime there's the pop where the red MBI is leading, it's going to fade. And it's just a matter of looking for that first beginning pivot, either from a DOC standpoint, where in this case, Cyan took over, and better still was even the white MBI leading on the fade of the magenta. And then you get the slow build backs. These are those little inner periods where you're just waiting for the clean out, so to speak. But as you start getting these pops and white MBI leading over 40, you're headed to a 0% line. So then it's just a question of whenever you get that magenta that moves back below. To me, it's one of those where you just add in, and you can see the effect of it was clean, simple, and quite beautiful from a numeric standpoint. I mean, you went from this 37 level, 37 almost 10 to 3640 in very short order. Can't complain about that. And even when it fights back and forth, I mean, sometimes you just get a lot of the little muck, but that's just a matter of playing it back and forth. You can see here we are in the post market as the sell came in, MBI white leading plus 40 on that one as well. And then the breakdown, and then particularly once that 25 is breached, you can see how that escalates into a cascade. And that's what took us down here into the pre-market so far. And there's been pretty decent activity range-wise, but it's all been to the negative. So there you have it. The macro situation is really leading this market at this particular stage, and it's just because there's no other indication that an intervention contrary to what these policies produce exists. And so until that changes, I think we're going to continue to look for softness, and any pops are really probably going to be vague unless you see some kind of policy shifts. So that's where to follow it, but great for trading. As always, though, look for me on the Skype chat. Trade well.